Some $12 billion flowed into exchange-traded funds listed in the U.S. last month. That's according to ETF.com. And here to talk about where you can find opportunities in the ETF space is the site's CEO, Matt Hougan. And Matt, welcome.
Thank you for having me.
So about $84 billion flowed into ETFs from the beginning of the year through June 1st. That's compared to about $50 billion last year. So for investors who want in on the space, I mean, where do you see the opportunities within ETFs?
Sure. Well, a few things. First, it shows you should be looking at ETFs, right? They're the dominant way people are investing in the market right now. The big trends we're seeing in the flows, we're seeing enormous flows into currency hedged exposure to Europe and Japan. People want to play those markets, but they don't want the currency risk. ETFs makes that easy. We're seeing flows into international bond funds, and we're seeing flows into some sectors. Financials got a big slug of new money in May, and you know, out of other sectors as well.
All right, let's focus on currencies for just a moment. What ETFs do you like when we're talking about people trying to hedge against currency volatility?
Sure. So the ETF of the year is HEDJ. That's an ETF that gives you exposure to Europe, but hedges out the currency risk. So European stocks have been going up, the euro's been getting slaughtered. If you bought a traditional exposure, you'd probably be flat for the year, maybe up a little bit. The currency hedge exposure have given you about a 10 or 11 or 12% outperformance simply by eliminating that currency risk. And a lot of people think the euro is going lower, so HEDJ. Same story in Japan. DXJ or DBJP, two options. One tilts towards manufacturers and export firms, that's DXJ. The other one's more plain vanilla. Either way, the yen is only going in one direction, which is lower, right? That may continue for our entire lifetime. And you want exposure to those Japanese equities, but you don't want that currency exposure. This gives you an easy push-button way to play it. Either of those ETFs is great.
And a lot of that is because of central bank stimulus across the globe, whether we're talking Japan, Europe.
Exactly.
Let's also talk about gold. I mean, there's plenty of uncertainty when it comes to Greece's debt woes, even here in the U.S., the Federal Reserve, in terms of when they're going to hike rates. Any ETFs in the gold space that you like?
Sure. Well, I mean, there's GLD. That's the dominant exposure to gold. That gives you pure exposure to gold bullion. If you're worried about, you know, the massive quantitative easing and the effect on fiat currencies, that's a great play. We're actually seeing some interest in the two gold miner ETFs. That's GDX and GDXJ. The latter focuses on small, riskier gold miners, the former on big, stable plays. Those stocks have been beaten down for 5 or 6 years, and we're starting to see people think, well, maybe there's a little bit value there. If gold gets bid up, all the sort of cost and risks have been bid out of those stocks, maybe gold miners might be even a better play than gold itself.
All right, and now let's also talk about bonds. When we see bonds, we're talking about the yields on the 10-year Treasury. We're seeing those creep up a little bit, about 2.36%.
Yep.
So tell us, what are ETF investors doing in the bond market?
Well, it's really interesting. So for the first 4 months of the year, ETF investors were just going in. It was like 2014. Everyone was worried about rates rising, but people bought bonds, and bonds did well in 2014. In May, we saw something entirely different. We saw people pull back. We saw people shorten their duration. They are worried about the long end of the curve. And we saw people buy international bond exposure as well. International bond flows had $1 billion of inflows, whether that's emerging market debt or just broad-based international exposure. I think you're going to see more of that, people looking outside the U.S.
All right, some good advice there. Matt Hougan, CEO of ETF.com. Thanks very much for coming in.
Thank you for having me.
I'm Scott Gamm, and you're watching The Street.